Hey everyone, this is Evan Carthy from evancarthy.com. September 27th, 2022. It's Tuesday, so let's go over the trades from the markets I trade. So starting out here with the S&P 500, the main trend of the day, using the semaphore right here. That semaphore right there and that red one right there. When price goes and breaks below the median line right here, what I'm looking for is that when it closes below it, that initiates the first short target entry. And what we're looking for is price to go down to this first green line right here, which is the 0.382 Fibonacci numeric numbers right there. Using it for, let me just show you right there, see 0.382, and then the yellow line is 1.618. So that's going to be the first target we're looking for it. You can see price did close, came back up, went against it a little bit, but then came down and filled. And then the second target is way down here at the yellow line, the 1.618. This unfortunately wasn't a trade for myself that I got into, because you can see price came down and when it hit it perfectly down there for that trade to complete it for that short side setup. So that was the major trade from today that initially started at about, what is that? 9:05 a.m. Central Standard Time, and then got completed down here at about 12:40 Central Standard Time for it right there. And then there is there's two other active trades is actually in right now. Another trade setup that I've been doing is using just simple Fibonacci retracement and extension levels, and using either the red or the white semaphores for it. So when you have a red semaphore and it's going away, just assume, like, say for instance, like over here on the right side of the chart, that hasn't formed yet. So when this red one starts right here, this red one, as long as I'm not already in a trade from it, is we don't use it anymore. So let's say that that this one, this red one wasn't formed here yet, and so this red one, but obviously this red one was, because these red ones don't form just right at the low. It usually takes a while for the candles, because as you can see, there's no red one forming down here, and price is still moved off over from the white one. But in order to have a red one, you have to have a white one, because the red ones are the primary and the white ones are the secondary. So in order to have red, you have to have white. So for instance, for this one, what I'm looking for is, there's the low, price came up, started retracing for it, hit the 30% line. So that's the first entry. That's not where I'm taking it right now, and I'll show you why here in a little bit. But that would be the first one. And the exit we're looking for from that one is down here to the 1.618 level. But that one did not go down there and get hit, so no big deal. So what we do is the second entry for it is the 61.8 level right here. And what we do for that one is the exit we're going to have is going to be the 50%, the yellow line right there. So if I do get in a 38% line, and then I do get in there, I move my exit up right here. So it's barely a win, just a slightly a win. So for what I'm doing right now is I'm just waiting for at least price to come down to the 61.8 level. That's why I'm looking at the trade right now. When I build up my account bigger, then I'll be looking at getting into the 38% line right here, because I'll be trading multiple contracts at the 61.8. And then there's also one more entry just in case, if price is 61.8, which you see it did right here, did not come back right away and hit the 50% line. So what we do is the third entry is up here at the 88%, 88.6 Fibonacci retracement level. So when price hits that, the exit moves down to the 61.8% level, and that's the final exit where it's going to be. If price continues to move off against me, then I don't worry about it. I just leave my exit right there. You can get in later if you want to, like say for instance, a good, which I'll show you in the Russell 2000, a good area is the 1.618 level. I'll show you that here just in a second. But as you can see from this trade right here, price hit the 88.6 and went down and hit the 61.8 to complete that trade setup for it. So that one's dead and gone. So then moving them forward for this one. So by that time, obviously this red one down here would have started. So we keep moving it up, looking for price to come down and hit the 30% line, and it didn't happen until it hit right here. So price came down and hit the 30% line, did not hit the 1.146, continue to move lower, blew past the second entry, 61.8, and then blew past the next entry, which is the 88.6. So price still has a little bit of work to go before it hits the 61.8. You can see it made a push back up to it, but then got stonewalled close to the end of the day. So I'm looking for tomorrow to at least go up to around 36.83 to complete that trade setup, and we will I like putting a little green box there to know where the exit is for that trade and what zone that we're in for it. So that's that one right there. And then for this one down here, I'll just take that off of there. This one down here, using this red semaphore, price has come up, hit the 38% line perfectly for it, and then so the exit we're looking down here is the 1.146. So we do have conflicting trade setups. We're looking for price to come up and hit around 30. Was that 36.83ish area right there? And then we're looking, but currently for this setup, we're looking for price to come down to 1.146. But if price comes up and continues to go up, hits this hits the 61.8, exit moves down the yellow line. But if price continues to go up even further without hitting the yellow line, then the next entry is going to be up here around 3721.50, and the exit is going to be the 61.8 line at 3695.25. So checking the overbought oversold indicator, it's still just creeping along right here. You can see we had that bottoming out, and I was looking for a bigger pop up than what happened, and we didn't get a big pop up, and all we're having is lower lows being made, but higher highs being made on the MFI. Lower lows in price, but in MFI, higher highs compared to where that one is right there on the 4 hour. And then daily chart, it is oversold, so I'm not really looking at all to get in on any short trades. Right now, I'm switching everything over to long trades just because I am looking for a big pop-up, since now it is in the daily chart. As you see, here's the last time it was overbought over here in the daily chart. Hit it, sold off. Here's the last time it was oversold in the daily chart as well. So it went down a little bit lower, but then we had a nice little rally up there right there. And then here is here it was overbought in the market, hit up right there, and then we've had a huge sell-off ever since there. So now that it's going down into oversold territory, I am looking for very soon, next couple days, maybe tomorrow, definitely could be tomorrow the next day, a move up, just because this market is extremely oversold. Because when it hits the daily chart for the SP 500, we're going to see a pop up here. So moving on to the Russell 2000, we'll just start with the MFI indicator. We can see this one as well, completely oversold in the daily chart. 4 hour chart has been rising a little bit, but once it hits down that daily, just like SP 500, I'm expecting a rally in the market. So one of the main trades for this one right here is using the Fibonacci one. We were using this red one right here. Price came up, that was the high, came down, hit the 38, did nothing, blew right through it, blew right by 61.88 all the way down here, and now price started recovering at around, the low is in, what time is that? 12:40 Central Standard Time. So look for price to come up and hit 1683.2 right up here, and then I'll show you what I was mentioning about. See if you use the 1.618 the other way, it can be a good area to get in for another contract right there. Because if I had gotten in right there, you're looking at really nice profits moving right up there, going up there. So that is that trade that is currently in the setup for it, using the modified shift pitchfork. We can see right here, this was a nice trade today as well. Price came down, closed below the median line right here. Didn't get any chance to get into it because it never retraced at all. Hit that first target, came down, hit the second target. No problem at all for that trade. And then if we want to use 3 of the white semaphores, because as I mentioned earlier, to have a red, you have to have a white that makes it. We can use that one. We can see price has just broke out right there, went up, hit that first target, and so what we're looking for is it to eventually come up and hit along the yellow line somewhere right there. So between that trade and look forward to come up over here, I think it's looking for a positive day in the market tomorrow. But now that since I said that, we'll probably have like a 3% sell-off. So, that's the Russell 2000. Moving on to oil right here. Let's go to the overbought oversold indicators. Daily never quite made it down to the oversold indicator, got really close. 4 hour chart, it has come out of being oversold with it. We've had a little bit of rally until the last day or so, but since it's not in the daily chart of being completely oversold, I'm not as confident as the rally as I'm looking for in like the SP 500, the Rusell, and then also the Dow Jones. We'll get there in just a little bit. So moving forward for this one, there is active trade set up using the white semaphore. In oil right here, there's that one right there. Price came down and hit that because this one came down and confirmed before this white one was created right there. So what initial target we were looking for was up here, but that didn't happen. So now that it's hit the 61.8, the exit we're looking for is right there. But since this is the most recent one, I'm going to use this one instead, and there's nothing for it. All we're looking for, you can see we had, which the white one hadn't been created when this one was formed right there for this one. It might have been for this one right here. You can see price came up, hit the 50%, went down, hit the target. So all I'm looking for is price to retrace up and hit the 30% to kick off that trade for it. Now using the red semaphore, let me show you this right here. Because since there isn't a red one created at the bottom right here, we can still use this one for it. But this one has been completed. You can see there was the bottom price came up, hit the 38%, never came down, obviously hit the target, and then price came up, hit the 61.8, never hit the 88.6 right here, so the target remained down here, and then here at about 3:30. Price came down and fulfilled that target, so that setup is done. So in order to continue to use this red one using a short right here, price would need to come down, breach this low right here. It would need to breach the low and then go and make a pullback to start it, and that would have to be without a red one down here forming for that one to get hit. So we're just wait and see mode for the crude oil market. There is this setup right here using the inside pitchfork, and what we are doing, excuse me, is waiting for a price to break below this right here. And it's getting very close to doing it, so we'll see when the futures markets open back up in a little less than an hour now. If price does close below this median line right here, then the first target we have would be right here with this sliding green line. It's currently, my cursor's at about $77.55. And then if we're going to get a huge sell-off for it, then the next exit is down here at this sliding yellow line down here around $76. But like I said, price doesn't always come down there and hit that. It can though. But if price does close below there and I can get a good price, I'll definitely look to short this market to get at least down into that one right there. And then last but not least, going over into the Dow Jones using the daily chart, oversold, overbought MFI indicator. It's in the oversold territory, just like the SP 500 and Russell 2000. Using the 4-hour chart, it had been oversold, but is now has started kicking out of it, getting a little bit more buying momentum for it, but price still has been going down from it. And then the currently trade setup that we're having using the Fibonacci trade is prices hit the 38% level, but hasn't come down and hit the 1.146 level. So the next entry would be up here at the 6.18 level, 61.8, which is 29,458. And then if price doesn't hit the yellow line, so that would change it to right there. But then if price continues to go up, hits the 88.6 right here, then the exit would move down here for that one right there. We did have let me show you here real quick. Using the modified shift pitchfork. Just kind of like the S&P 500, we have a real nice setup for that one. When you see price close below the median line right there, came down, hit the 38% for the first target, and then the second target all the way down the yellow line right there to complete that one as well. So moving forward for the Dow Jones, we're just currently looking at this setup. Moving to the short, but there is actually a movement up here. Well, let me see here. Let's see how far it came down here and hit. Nope. Okay, so this is already done because you see using the white semaphore going long for it. Price came down. Let me get this green out of here. I'll just get all this out of here. Price came down, hit the 38%. Never went and hit the target up there. Did come down to hit the 61.8 and then hit the yellow line right there, which is the 50%. So that setup's done right there. For it. So anyways, those are the markets for today, as everything is oversold as far as SP 500, Russell 2000, and Dow Jones for the money flow index indicator and the daily chart. So me personally, I am looking for long trade setups tomorrow, and I am looking for a rally in the markets because it's showing that it's the daily indicator is oversold. So definitely the next couple of days, looking for a rally in the markets. All right, take care. Talk to you soon. Bye.